You're listening to The Money Hour with your host, Tina Mitchell. Sponsored by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, June 11th show. I provide you the news on everything money, fresh information, and market trends and conditions in our local economy. If you're hearing my show at a different time or day, you are listening to a rebroadcast. To talk with the guests that I have in studio, you can call at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. And I'm actually having a phone conversation today, not in studio because Larry's out of our area, but I have Larry Goins with the Goins Group LLC, and we're going to be discussing buying HUD homes for pennies on the dollar. Larry, thanks for coming back or talking with me again about your expertise and you're in this arena.
Awesome. Thanks a lot, Tina, for having me. I really appreciate it.
Of course. A little bit background about Larry. Larry's an active real estate investor, author, and coach, and travels the U.S. speaking and training audiences at conventions, expos, real estate investment associations on his strategies for buying and selling 10 to 20 properties per month without leaving your home. Larry has written 2 books that can be found in the bookstore anywhere, Getting Started in Real Estate, Day Trading, and HUD Homes Half Off. Between speaking engagements and mentoring investors, he oversees the daily operations of Investors Rehab, Inc., which is a real estate investment company that buys and sells 10 to 20 properties a month. As a husband, father, businessman, and real estate investor, Larry holds true to his core values and moral integrity. His professional, personal, and business motto is people and principles before profits. So, Larry, can you talk a little bit about what a HUD house is? Explain that to my listeners, and how does the house become a HUD house?
Oh, I'll be glad to. Well, HUD is a great way to find great deals on properties. And the way a HUD house becomes a HUD house is someone gets an FHA loan, Tina. And what they do is they go to a bank and get a loan, and that loan is underwritten based on FHA guidelines. Now, FHA, Federal Housing Administration, or HUD, Housing Urban Development, they don't make loans. They just insure loans. When a borrower goes to a bank, say Bank of America or Chase or Wells Fargo, and get a FHA loan, and that loan is insured by FHA, so a little bit of premium is paid every month along with their mortgage payment to FHA to insure that loan. So if and when that borrower defaults on the loan with, say, Bank of America, then Bank of America contacts FHA, which is HUD, and says the borrower has defaulted. I'm cashing in my insurance policy that we've been making payments on, or the borrower has. So now HUD pays off Bank of America, and then HUD forecloses on that property, and it becomes a HUD house.
So, Larry, why are the HUD properties, this is your specialty in HUD homes. What is exciting for you in coaching and educating about how to purchase these homes? And we're not seeing as many of them now because it was a lot more common after the financial meltdown, and things are obviously getting better. So why do you continue to focus on HUD properties?
Well, I love HUD houses. Of the 21 deals I have on my board right now, and we buy and sell a lot of houses and help people become homeowners, probably about 16 of them are HUD houses. It's a very, very simple, easy to understand process, and it can all be done online. It's really, really simple process. And yes, there's not as many deals out there on HUD as there used to be. However, there's not as many of REO properties or foreclosures or other properties as there used to be, but HUD continues to be a very good source for us to get properties at deep discounts.
Well, and I think also too, Larry, people aren't thinking about HUD homes. They're because we're not in that financial crisis. So, working an avenue of areas that there's not a lot of people out there checking them out anyways. Now, Larry, what about the discounted price? Why is it that you're able to get these discounted price on HUD homes?
Well, a lot of people say that. A lot of people are like, I can't get a deal on a HUD house, But the challenge is, or I shouldn't say the challenge, the thing you have to realize is, if a house was listed last week, and you know this, Tina, if a house was listed last week for, say, $100,000, you're not going to be able to pick up that house 3 days after it was listed for $30,000, $40,000, $50,000.
Correct.
That house is going to need to be on the market for at least 60 to 75 days, okay?
Which in this market, no house is staying on the...
yeah, and that's true. So, and a lot of people say, well, I can't get any houses in my market or in my area. Well, you may need to go outside the area a little bit, especially for investing. Especially for investing. And I do buy a lot of houses in smaller towns, what I would call bedroom communities from the big MSAs, metropolitan statistical areas. But we're getting really good deals. I bought a house, and I know these values are going to be hard to understand for you guys out there on the West Coast, but I bought a house not too long ago. It was listed for $44,000, and I picked it up for $9,125. That's 20%.
Yeah, crazy. So if you're looking at building in your investment portfolio, not really in our area here necessarily, but getting a property in areas that might be in some economic distress and areas that that they have some more HUD homes. So can anybody bid on a HUD home? Larry, can you answer that question for my listeners?
Yeah, absolutely. Yes, anyone can bid. However, the bid must be submitted by a realtor with what's called an NAID number. That stands for National Identifier Number. And most every realtor does have one of those, or they work for an office that the real estate company has an NAID number. So it just has to be submitted by a realtor with an NAID number. And, quite frankly, most of the time, these properties are only available to owner-occupied bidders for, say, the first 15 days.
Got it. And that makes sense because HUD's trying to protect the home ownership for people that are trying to get into homes. So if you're listening, want to know the why behind it, is that's really what HUD is for. HUD's to help people to get into homes, not to help the investors, build their portfolio. So makes sense.
That's exactly right. They want to promote home ownership.
Correct. So Larry, the process of buying one of these HUD homes, how does that look?
The process? Yeah, it's really a pretty streamlined process, which is pretty neat. You can go to HUDHomestore.com and you can take a look at all the properties. You can search by state, by city, by county, number of bedrooms, number of baths, address, if you know a specific address or whatever. They're all listed by case number. That's the way the government keeps track of them. However, you can go there and search and find out and analyze the deals and determine what you want to bid on it. But HUD, quite frankly, is a daily auction. Every day you can submit a bid on a property, and they go through it, and they have a computer system, and it goes through and looks at the bids and determines are they going to reject it or counter it or accept it. And it's a daily auction. You can bid on the same house every day if you want to. And like I mentioned, there's one of three things that can happen. They either reject it. If they reject it, nothing happens. It just expires.
Sure.
Or they could counter. Or they could accept your bid. That's the three things that can happen.
Makes sense. And again, everything is just, you're just doing it online, so it's easy to do it from anywhere. So, Larry, what about after, let's just say that the offer does get accepted, what happens during the offer process? Anything that's, different from your traditional purchase?
Yeah, well, they could, like I said, they could either counter or accept. If they counter, you could counter back, or you could accept their counter, or you could submit a new bid if you wanted to. And if they accept your bid, then what's going to happen is they're going to email your realtor with the NAID number that submitted the bid. They're going to email them the contract package. Now, the contract package for an investor is a little different than for an owner-occupied buyer. An owner-occupied buyer can make it subject to financing approval.
Okay.
When they sell a house to an investor, it's a cash-only sale. There's no contingencies. There's no inspection period or due diligence period. you need to have looked at the property prior to bidding on the property and make sure that you know the condition of it and all that. Because if they accept your bid,
it's yours.
And you send in your deposit and the contract, if you don't close, you will not get your deposit back.
Yeah, it makes sense. So what are the behind-the-scenes strategies that you're using to get these HUD homes at a discounted price?
Oh, that's a great question. That really is. Well, we have bought properties at 50, 40, 30, even 20% of list price. And we look for unique properties. I'll give you a really good example here. Mm-hmm. We found a property not too long ago that was a 2-bedroom house, okay? It had been on the market about 75 days. And it was a 2-bedroom house, but the house was 1,450 square feet, okay? It's big enough for 3 or 4 bedrooms, actually. So because the house was only a 2-bedroom, what we did is we went in and looked at the house and said, look, you can put a wall up here, a closet here. You can turn it actually into a 4-bedroom house. So now we have a value of a house that with a little bit of remodeling, it turns from a 2 into a 4-bedroom house. So we bid on that house as a 2-bedroom, but we're able to sell it as a 4-bedroom.
Makes sense.
And create a lot more value there. So we bought it at a deep discount.
Yeah,
that's just one simple way.
And that makes total sense. So this is not, any magic things. It's really being strategic on the houses that you're picking and using an expert that can help you through that process to find those, and not, just jumping into anything to jump into it, but making sure that you're jumping in when you find that right financial opportunity, a home. Do you have another one that you can share with my listeners, Larry?
Oh, absolutely. Absolutely. We look for properties in specific areas, not big cities, not big MSAs, but like bedroom communities, smaller towns where people were born there, they're raised there, they lived there all their life, and they want to build a family and want to have a home, and they're very stable, and there's not near as much competition.
Yeah.
Now, this is true not only on HUD, but every other source as well, but there's not a lot of investors out there in the smaller towns, and we're able to pick up properties at 50, 40, 30, sometimes even 20% of list price. Now, also, here's another one. There's a sweet spot for getting HUD to give you a deep discount.
Okay.
The sweet spot is around 60 to 75 days on the market.
Got it.
If the house hasn't sold in 60 to 75 days, they start to lower the amount that they will take on a house, which is really good.
Yeah, and that's why it's important, having an expert that is in that arena doing this on a day in and day out, understands, what those, how those statistics and numbers work to where you can get the bank down. So that's awesome. So some simple steps in the system for analyzing whether it's a good deal. Is that something that you're doing for your clients, or you're giving it to them and telling them, hey, you want to start looking at properties that are, on the market 60, 70, days plus, or, how does that process work in what you're doing with your clients?
That's right. In fact, typically we don't even start bidding on a house until it's probably been on the market 50 to 60 days, something like that. That's when we start bidding. However, I do want to share this with you. For example, we picked up a house recently. It was listed for $44,000. Now, it was in one of these smaller towns, okay? It was in one of the smaller towns, but it was listed for $44,000. Now, the 15-day bidding period for owner-occupied only had expired, and this very day it was available to investors. We called the listing agent. They said, this house is way underpriced. I mean, we looked at it. We could tell it was way underpriced.
Yeah.
And it was listed for $44,000. That's another advantage of HUD houses is they're typically listed below list price already. So it was listed for $44,000. She had 3 other investors bidding on it. We bid up to $45,601. We just kept going up to like the next thing, $44,100, $44,101, $44,501, $45,600. Then we finally got to $45,601. We got it. We got the house. And we put it on the market right away for $99,900. The house needed no work. It was in pristine condition. We asked the realtor what kind of work it needed. She said it needs curtains. That's all it needs. So we put it on the market right away for $99,900. as is. I mean, it didn't need any work.
Yep.
And the third person to look at it made an offer of $85,000. They got their own money. We made $40,000 on it and didn't touch it.
Yeah, not too bad. You just got to be looking for those opportunities. So, do you see on the investment side, mainly because majority of my regular listeners are, around our local area here, and anybody in buying these, opportunities for these HUD properties would be buying investment opportunity or more likely as a flip opportunity and to be able to turn that quickly. So, do you see majority of your investors, are they turning around and selling them right away? Or do you have some of your pool that actually are holding on to them as investment properties?
Well, that's a great question, and quite frankly, I teach mainly. I've done rentals. I've done landlording. I've done fix and flip. I've done wholesaling. I've done seller financing. I've done commercial, residential, multifamily, the whole 9 yards. But there's two things about real estate that I don't like. It's tenants and rehabs. That's the only two things I don't like. So I do seller financing. Like we bought a house recently for $30,000, and we got a great deal on it. I mean, the house was worth probably $75,000, but we sold it for $69,900. We got $5,000 down payment from the buyer who couldn't qualify for a mortgage, and then we financed $64,900. So now we have just under $600 a month coming in for the next 20 years.
Got it.
And the other thing we do is we do wholesaling. Like we'll find a property at a deep discount, and then we'll add about $10,000 to it and sell it to somebody who is going to fix and flip the property.
Got it. Okay. All right. So I've got a minute. Just got to wrap up the show here. So just really quickly, a call to action for anybody that's interested.
Oh, absolutely. If you'd like to get a copy of my book, we talked about this. It's called HUD Homes Half Off, How to Buy a HUD House at 50, 40, 30, even 20% of list price. You can get it available wherever books are sold, but just go to freehudbook.com and you can get one absolutely free, and we'll be glad to send it right out to you.
Larry, thank you so much. I appreciate the conversation with you again, and look forward to talking to you in the future.
Sounds great. Thanks a lot for having me.
Okay, bye-bye.
Bye-bye.
And this is your host and mortgage expert, Tina Mitchell, signing off for the day. Enjoy the rest of your Saturday, the rest of your weekend, and I'll be here next weekend to talk a little bit more about your money right here at 1150 AM KKNW.